Hello everyone, and welcome to this week's special presentation titled How to See Beyond the Noise and Follow the Trend. In this presentation, we're going to learn how to cut through the market's daily fluctuations and focus on the bigger picture, discover how to identify underlying trends that drive long-term success, and avoid being swayed by short-term volatility. Understanding how to follow the trend is a crucial skill for making smarter decisions and maximizing returns. And in tonight's presentation, we're going to go over one proprietary indicator in particular, probably one of my favorite indicators within the VectorVest 7 software, and that is the MTI, or Market Timing Indicator. Before we just get into the VectorVest 7 software, I want to give you a backstory on what is the MTI, especially if you're new to the VectorVest software or this is your first time watching one of our presentations. Now, MTI looks at the underlying trend of the market. It is a combination of three proprietary indicators here at VectorVest: the VVC, BSR, and RT. Now, the first one, the VVC, is the VectorVest composite. That is how we track the broad market. It's just simply an arithmetic index average of over 9,000 stocks within the US market. Now, that being said, right, it's kind of like taking the NASDAQ, S&P, Dow Jones, Russell, putting them all together, plus to give us a better sense of overall broad market direction. Now, number two, relative timing, or RT. This is a technical indicator. It's an oscillator, and it just gives us a sense of direction and the magnitude of that direction when it comes to the VectorVest composite, the broad market. Now, the third item is the BSR, or buy-sell ratio. This determines the overall health of the market. Simple ratio, if you think about it, we've got over 9,000 stocks in our database, right? This ratio compares the buy and the sell rated stocks. If there's more buy rated stocks in our database, well, that's a sign of a healthy market, right? If there are more sell rated stocks than there are buys, that is a clear sign of market weakness. So I just wanted to give you a backstory on MTI. Now let's dive in a little bit more into the technicals and what levels we should be paying attention to. Again, these attributes, when they are combined, make up the MTI, the market timing indicator, right? It's cast on a 0 to 2 scale, tracks the underlying trend of the market, levels for potential market tops and bottoms. That is key, right? That's what this whole presentation is going to be about. It gives us a sense of market direction and the potential it is more likely to go. Now, that being said, right, the top of the level, an overbought market situation, historically speaking, is usually around 1.5 to 1.6, while the market typically looks for a bottom around 0.6. Now, the note at the bottom, right, these are zones. It's not going to hit, 1.5 or 0.6 on the dot. Well, it might, but chances are it won't. It's typically when the market is looking for a top or looking for a bottom. It can continue to run, and the market can potentially continue to drop. That's why we like combining these levels with market timing signals, and that's typically utilized more so in the bottom fishing videos that we do, and we do have resources for those videos on VectorVest University or on our YouTube channel. Now let's jump into the VectorVest 7 software, take a look at the market timing graph, get a better visual and a better understanding how to best utilize the MTI to ignore the noise and have a successful portfolio going forward. Here is the homepage of the VectorVest 7 software. Market timing, market direction, always the headline story here, right? You can see the major indices in positive territory today, but one day does not equal a trend, right? This is noise in the market. If we take a look, we can see there is a little bit of slowdown. We got 3 yellow lights across the board. The bearish pressure on the market taking a breather today, right? But if we take a look, the trend column, this first component, is the primary wave. It is still currently down. That's why I mentioned a moment ago, just because you see the MTI in the 0.6s doesn't mean to start loading up on stocks. We want to see a shift in market direction, maybe a green light, things of that nature. We've done bottom fishing videos in the past. Definitely take a look at those going forward. Now, here's the item here, MTI at 0.68, right? You can see the clear downtrend of this market. So let's go ahead and jump into the market timing graph. Here's the market timing graph. To begin, we're going to start off with MTI and price action of the VectorVest composite. We can see the VectorVest composite represented by the candlesticks. Again, this is over 9,000 stocks when we're tracking the broad market. On top of that, we do have our MTI, or market timing indicator here. And to get a better picture, let's go ahead and zoom out to about 2 years. Here we get a good sense of the overall up and downs of the market for almost 2 years now. We can see at the beginning of this chart here, MTI giving our subscribers plenty of warning here, showing that the market was in an overbought situation, right? If I use a date line, we can see the peak with the MTI came in at 1.59, clearly in that zone that we speak of, and therefore the retracement not too surprised to follow suit. Now, you do want to couple these with market timing signals. For this example, I'm just going to use the DEW. You can see the DEW down signal was given shortly after the market timing indicator retraced from these levels here. And again, you can see buying opportunities when the MTI gets down to 0.6. We can see the market with a clear run. But again, you can see the MTI took several weeks down at these levels to really find a bottom. That's why I always say couple the MTI with a market timing signal that is appropriate for you. In this example, I got the DEW here back on November 3rd, shortly after, rising above here. For more prudent or conservative investors, having the underlying trend in your favor from the beginning, therefore the MTI would have to be above 1 before entering the market. And if we take a look at the confirmed call, this is a more conservative market timing signal. We can see that the confirmed call signal was given when the MTI was clearly in positive territory, looking for that sustainable uptrend. Nice run here until we got the confirmed down situation. Now, another note you can utilize with the MTI is look at the bearish divergence we had here. Price action on the rise. And if we look at the underlying indicator, we can see it trending lower and lower. And eventually that bearish divergence coming to fruition. So again, even though the MTI gets up to these levels, look for the market timing signal before just getting bearish in general. Now, if I zoom into a 1-year time span, here's the more recent examples that we've gotten here. We can take a look at the MTI and we can notice pretty well that anytime the MTI gets close to these levels here, that upside potential in the market becomes less and less with more downside risk as the potential here. We see that coming to fruition quite a few times, and especially more recently here, we can see these levels, the MTI levels, reaching new highs. Now, one thing I do find very interesting here, if we take a look, we use the freehand line, the MTI actually failed to make a new high, while during that same time period, the VectorVest composite kept rising, right? And again, the bearish divergence coming to fruition. Here's the confirmed call. The confirmed call signal has been down since December 10th, right? Now, for my swing traders, more active traders, they typically utilize the DEW. If I zoom into a 3-month time span, we can see back when the MTI was getting close to these oversold levels, once again, it gave an opportunity for traders to play the market to the upside. You can see the DEW signal given here with some optimism, not too much optimism in the broad market. And the big concern here is that the underlying trend was not favorable for very long. You can see the underlying trend, the MTI, in unfavorable territory below 1 since the end of January 31st. We can see price action of VectorVest composite. Here's my levels of support here. We can see almost a break in that level of support. And if we take a look at MTI coming in at 0.66 currently right now, thus it's telling me that the market's looking for a bottom, but yet the bottom is not quite in. So we go back out to 1 year just to recap here. You know, again, being bullish when the MTI is getting low, getting your shopping list ready, those are all of the appropriate actions. You just want to make sure you couple it with some market timing signals, utilizing the VectorVest 7 system, and this is a recipe for success. And more often than not, we see these bearish divergences between MTI and the price action of VectorVest composite coming to fruition, giving us signals of big drops in the market as we've seen back in 2024, and additionally with the most recent bearish divergence here lasting in November, December of 2024. And the market following suit, that bearish divergence coming to fruition once again. This is the reason why I wanted to put the MTI on your radar if you're not already utilizing this for market success. This is a great, simple tool to stay on the right side of the market, give you better opportunities to be profitable going forward, especially with heightened market volatility that we are seeing. Again, my name is Ryan. It's been a pleasure giving you tonight's presentation. Everybody have a wonderful weekend. And if you have any questions, please do not hesitate to contact support. Good night.